Yes, the Bank of England and the Treasury, they have not slayed the inflation dragon. What they have done is they've kind of calmed the inflation dragon down because it was getting a little bit out of hand and people were noticing it, because the purpose of the Bank of England and the Treasury under a fiat currency system is to keep inflating things. Wednesday, May 22nd, 2024, Monaco 64, home of alternative economics and contrarian views. We've had the inflation numbers in the UK come out this morning, or CPI, really, that's what it is, because inflation, as you should know by now, is the excess creation of currency and credit out of thin air. And that, of course, we've had in spades, especially since 2020. And some of the problem lies with the definition, but we're going to focus on what the Bank of England, politicians, the mainstream, and everyone sees as inflation. So, have the Bank of England and the UK Treasury slayed the inflation dragon? That is the question I'm going to ask today, and I'll let you also tell me what you think by commenting below in the comment section. And the other thing that is very interesting, does it feel to you that prices are actually coming down, that everything stopped? Are they back to where they were before 2020 or 2015, 2010? And if the Bank of England has really slayed the inflation dragon, how come prices never seem to go down, even though we have some very misleading headlines today? For example, the Telegraph says inflation tumbles to lowest levels since 2021. It says steep decline in energy bills, aid sharp fall. And I think that's a big part of this data that came out today. It says fall boosts hope for a summer interest rate cut. And that's what they really want. And who do I mean by they? Well, I mean the Bank of England and the Treasury. And why? Well, because we live in a world of fiat currency where debt has to be increasing all the time. We don't let the economy liquidate. We always, and by we, I mean the government, the Bank of England, and people in general, people always want things to be going up, i.e. house prices, everything. We can't get like falling prices, which is something that used to be normal, and we're going to look at that today. And a lot of you probably have heard that the ONS, the Office for National Statistics, that publishes statistics for the government, they recently came out and revised all the excess deaths for 2023, 2022. And there had been a huge increase in excess deaths, but now there isn't. So a government bureaucracy that can be told by the powers that be to change data like that can very easily be told to change the CPI data to make things look better than they are. And how is it going to get worse for the pensioner, for the wage earner, for the average person out there? Well, this 2.3 CPI, that's what it came out at, that's going to now be the benchmark for the increase, the annual increase you're going to get in your salaries, your pensions and benefits and all those things. And it's not going to keep up with the real debasement of the currency. And we're going to look at that as well. So let's quickly look at the numbers then. Yes, CPI did come out at 2.3 according to the ONS, and it dropped from 3.2% in March. That's an annual increase. It was expected, though, to drop to 2.1. So it actually came out higher than expected at 2.3, despite all the rosy headlines. You're going to also see the chancellor, I'm sure, and others saying we've done a great job, we've brought inflation down. But let's look at the core CPI. And what is the core CPI? Well, that's the CPI without the food and energy prices. Well, that came down from 4.2 to 3.9. So it's still almost at 4%. It was expected to drop to 3.6. So I would argue that the inflation problem is still there. But aside from the ONS tinkering with the number, and if you don't believe me, I have a video from July 2022 where I caught the ONS flagrantly fudging the CPI or inflation data all the way back to 1949. So I would venture to say that the CPI is more like 3.2 or 3.5 right now. And why do they do that? Well, because they want to hide the fact that they're still inflating a lot. But I actually think that the most important thing about CPI and inflation is that in our current fiat currency system that the UK has had since really 1931. 1931 is the year the UK went off the gold standard. Yes, we were part of the Bretton Woods and the kind of gold exchange system where the dollar was pegged to gold and the pound was pegged to the dollar, but there were a couple of devaluations for the pound. So the UK has been inflating since 1931. So I wanted to show you this chart, and this is data from the Office for National Statistics. Unfortunately, this paper only goes back to 2003, but I'll show you another chart to prove my point. And it goes back to 1751, and I think that's very important because I wanted to show you how prior to the 1930s, when we went off a gold standard and adopted a fiat currency that can be created out of thin air with no backing of gold. And why is that important? Well, because it disciplines the government, it disciplines the banking sector that they can only create loans or credit or currency when they have enough earnings or enough gold coming in. But going off the gold standard, that went out the window, and now they can just increase it willy-nilly. But I think what's interesting here, if you look at the annual percentage change from 1751 to 2003, notice how from 1751 up until around 1930, I think that's the chart doesn't give an exact date, but it's pretty much around that period. Notice how you had ups and downs. By ups and downs, I mean you had CPI at, let's say, more than 30% in the early 1800s. Well, that was to do with the Napoleonic Wars. But at the same time, it came down by 25 the year after. And throughout the 19th century, you had positive and negative CPI. And what that did, if you look at the Bank of England inflation calculator, which has been tinkered with, of course, from 1949 until now, back in the 1800s up until World War I, for example, 1821 to 1914, and you can do that yourself in the Bank of England calculator. I'm going to put a link to it below in the description. The CPI in that almost 100-year period average mine is 0.1% a year annualized. So there's virtually no inflation, as they call it, or prices. The basket of the CPI was the same, didn't rise in terms of the pound. And why is that? Well, because we had a gold standard, we had a sound money system, despite having a central bank. And I'm not saying we should have a central bank, but be as it may, we did have a central bank, and we had no inflation. So notice though, after the 1930s on the left-hand chart, how the CPI never goes negative anymore. And therein lies the problem, and therein lies the problem for you, because you've been told now that inflation's dropped, the government has done a great job, the Bank of England's done a great job, they can cut rates again, but things are still really expensive. And why is that if inflation is coming down? Well, because they don't allow the CPI or the prices to go negative, and they can't. Why? Well, because there's so much debt in the system. Everything is so leveraged that if they did, the whole system would collapse. So the people who suffer are, the average worker, the people at the bottom, or not even the middle class suffers. Only the people with a lot of assets and the very wealthy can protect themselves because they've got assets. And that's why everything seems so difficult right now, despite the fact that we've been told everything's great. And notice on the right-hand chart how this CPI index has gone up so much. Look how it was pretty flat there from 1750 all the way to 1930, and then it started picking up, right? That's because of the left-hand chart where they don't allow it to go negative. So what do I think is the real rate of inflation that we've had? Well, I think the price of gold in pounds is a very good way to look at it. It's not a perfect way, but as you can see here from Incrementum AG and their latest In Gold We Trust report, the pound has dropped by an average of 10% per annum since the beginning of the century. Or put it differently, gold has gone up 10% per annum, in this century, in pounds. So that's the real rate of inflation, I would say. And we've also seen that MPs last month gave themselves a pay rise of 5.5%. So I'm sure they had an inkling as to what CPI was going to come out at. Why didn't they give themselves just a 2.3% rise? Because they know things are a lot worse. So yes, the Bank of England and the Treasury, they have not slayed the inflation dragon. What they have done is they've kind of calmed the inflation dragon down because it was getting a little bit out of hand and people were noticing it, because the purpose of the Bank of England and the Treasury under a fiat currency system is to keep inflating things. So yes, they've turned the temperature down a little bit of the boiling pot, but it's still going to boil. And unfortunately, your savings are going to be chipped away continuously, right? And the cost of living is not going to improve. But that's how they do it. And that's how they keep people in the dark, by these manipulations, I would say. It's difficult because it's not just savers they're hurting. They're hurting young people. They're hurting pensioners. And it's very difficult to protect yourself. The people who benefit, of course, are the politicians, the government, because the government is the biggest debtor in the nation, over almost 3 trillion in debt. And also the very wealthy who borrow a lot, they're going to be protected. The people who have borrowed up to here to take huge mortgages, they'll be okay for now. But and that's why I don't see any let up. I think the pound is going to continue to debase. But it's not just the pound, it's the dollar, the euro, all these fiat currencies, they're all like going towards worthlessness. So before we quickly look at the markets, I just wanted to show you the CPI index from 1988 to present, because on that previous chart it was only to 2003. And you can see that it's still going up. the index itself, not the percentage change. So that goes to show why you always feel that the government is lying, because they only focus on the percentage change. And according to them, debasing your currency by 2 or 3 or 4% or 2% is okay, but it's not. We need to go back to where if there is some inflation one year, we need the CPI to go negative the next year so we can bring prices back. But that's not part of the program anymore. The other chart I wanted to show you, and this in my opinion is the real inflation, is the M2 money supply in the UK. And you can see that from 1987, it's gone from 167 billion and now it's just over 3 trillion. Yes, it has come off a little bit, and that was actually deflation, but it's going to pick up again now that when the Bank of England cuts rates probably next month. And that number is going to continue to be going up. What we need to see is that go down, but they'll never allow that to happen. So let's quickly look at where the markets are this morning. It's just gone past 8 a.m. London time. We've got spot gold at 24.17. It's down about $4. High's been 26. The low, 11. Silver's at 31.82, down about 13 cents. High's been 32.22 and the low 31.57. I won't go over the stock market. It's fairly quiet. I'll go over the pound though. Yeah, the pound is up actually a third of a percent, 127.50. So the pound's doing fairly well. But if you look at the gold price in pounds, it's at 18.95. And we started the year, I think, at 1,622. So that's how gold sees the UK inflation. That's the real inflation there. And why do I say that? Well, because the pound was just a promise to pay in gold. And if the pound's going down massively versus gold like it has been this year, that means the currency is debasing. That means they're creating too much currency. So much for the low inflation, right? What about the other markets? Anything in particular going on here? Well, crude oil was down a little bit, about 1%. At 77.70, the WTI. I saw that Joe Biden is releasing, I think, 1.1 million barrels to the northeastern section of the U.S. for the summer. He's trying to manipulate prices lower for the election. I guess when other countries manipulate things, they're pointed the finger at, but it's okay for the U.S. to do it. What else? High grade copper, that's down 1% at 503. So there you go. Fairly quiet morning so far in the markets. And I think we have the FOMC publishing the minutes of their last meeting today, if I'm not mistaken. That might be important to dissect. So with that, I'm going to wish you all a very good day. Take care. Bye.